Good evening, everyone. Excited to make another video. It's been a minute, and we're going to get right into it. So make sure to hit that like and subscribe. I'm not a financial advisor, going to throw that in at the very beginning. Here we go. So Credo Technology Group Holding. I'm going to start off with this stock because I think that this stock is very, very oversold. Now, I'm going to talk about market conditions here in a little bit, but I do think that this stock specifically is oversold. Okay, now I'm not going to get into, I might make another video about what they do. You guys need to do your own due diligence. I'm just going to put this stock on your radar. Okay, so do your own due diligence, but I think that there could be big potential upside in Credo Technology Group, ticker CRDO. Now, here's a little bit reasons why, right? So the current price target is $191 to $204, right? So there's just significant upside as it sits at 97.30, right? This stock was kind of riding very low key. It did have a very significant rise throughout 2024, 2025. So just again, do your own due diligence, but I would first look at the price target. The consensus is that it's a strong buy slash outperform. You love to hear stuff like that, right? Maintaining a positive rating. The market's been pretty crazy, right, in general. So let's get into why I think the market has been doing its weird thing. And I'm not going to say exactly how long I think it's going to last. If you've watched another video prior to this, I mentioned that I think it's going to mirror last year's market, which the market kind of tanked in April of 2025, and then from May on it just had a V-shaped recovery. So where I think we're going to go is, well, where we are, right? Currently we are in a mature market phase or early distribution phase from what it appears. Okay, so I'm just learning this myself more recently, what these phases mean, right? But if we're in a mature markup or early distribution phase, that means that we're pretty much kind of on pause or even going to leave a bull market, right? Maybe even enter a bear market as you see on a markdown. Because if we're indeed in an early distribution phase, that leaves a significant time. And I say significant, but I would say probably till May or June time for the market to go down even lower, right? So just be aware of that, right? If you're going into stocks, good stocks, you want to understand that there may be some DCAing that's going to be good for you in the long term, because I do think that these next 3 months are going to be a big buying opportunity that we may not see again. And I say that, right? And specifically, I say that because you go into the geopolitical aspect, right? And I just simply ask stock market performance during wars, and I'm going to go to AI here. And it's being very vague, right? So go ask your own question, right? Go ask your own question on AI or whatever you use, and let's see. So historically, the U.S. stock market has shown significant resilience during major wars, often delivering positive returns that exceed peacetime averages, right? So let me keep reading. Sorry. While pre-war jitters and surprise attacks frequently cause short-term volatility, we're feeling that right now, and immediate sell-offs, I still think that's maybe we're in it, but there may still be more selling as we go along. Markets typically rebound quickly. This is my major point. Guys, once this opportunity leaves, I don't think it's coming back, right? This may be a new foundation for the market, the 50,000 Dow, the 7,000 S&P, right? The NASDAQ being maybe 24,000. This is going to be the new standard. So you just need to understand that. Bull market, bear market, whatever. I personally believe that these next 3 months are going to be difficult, volatile. Let's just say that, volatile. But then come July, I think it's going to be off to the races. So let me know what you guys think. Hit that like and subscribe, and I'll talk to you guys later.